Hi everyone, and today I'm going to explain the governance requirements for Canadian public companies, especially the difference between the board of directors and the audit committee. These are important concepts for the CFI, especially in management, accounting, and assurance concepts. These rules apply only to public companies, also called reporting issues. These companies are required to use IFRS for financial reporting and are regulated by the Canadian Securities Administrators or CSA. Private companies do not have to follow these governance requirements. This is a key distinction to remember for the CFI. The board of directors is the highest oversight body in a company. A typical board has 6 to 12 members. For public companies, the majority of board members must be independent, meaning they are not part of management and have no significant relationship with the company. The board is responsible for supervising the CEO, approving strategy, and overseeing risk management. The board chair is the leader of the board of directors. The chair must be independent from management and cannot be the CEO. This separation is crucial because it ensures that management is properly supervised rather than supervising themselves. The board chair's primary role is to promote effective governance. The Audit Committee is a subcommittee within the board. It is not a separate team. It's created from board members. Under NI 52-110, the Audit Committee must have at least 3 members, all of whom must be independent and financially literate. The Audit Committee oversees financial reporting, works with external auditors, and monitors internal controls. Here is the most important comparison for the exam. The Board of Directors is the large group of overseeing the entire organization, while the Audit Committee is a small group selected from the board to focus specifically on financial reporting. The board only needs a majority of independent directors, but the audit committee must be 100% independent. This distinguishing shows up frequently on the CV. Here are the key points to remember for the exam. These rules apply only to public companies. The board must have a majority of independent directors, and the board chair must also be independent. The audit committee requires at least 3 independent and financially literate members. Finally, the audit committee is part of the board, not a separate organization. If you remember these points, you will be well prepared for governance-related CPU questions.